please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Patra. With me is Prashant Nair, and it's a bit of a consolidatory trend that we're seeing for our markets today. So the Nifty is just about consolidating, and so is the Sensex. But what really stands out in today's trading session is the kind of recovery that we've seen for the PSU banking space, because I think an hour ago we had the Nifty PSU Bank index itself down over 1.5%. So you've seen an intraday recovery which has come in on that, and that's likely because of the news flow which is coming in on PNB with regards to Nirav Modi probably submitting a concrete plan in terms of the recovery of loans. So that is actually probably aiding sentiment at this point in time. But besides that, we have a lot of other stocks in focus. We have Bajaj Auto, Maruti, Escorts, all of them reacting to the auto sales for the month of Feb. And besides that, we also have stocks such as Fortis, which is in focus, as well as something like Graphite India, which is now up around 14 to 15% on a week-to-date basis. Hi, Prashant.
Ekta, hi. I think the point about PNB is absolutely bang on. When the news flash on the offer which Nirav Modi made via a letter to PNB on the 26th of Feb. Now, of course, we must wonder why this wasn't disclosed to exchanges earlier. It's been, what, 3 days? If that report is correct, that the letter went out, letter went to them, and they got the letter on the 26th. But that's a different point. But you're seeing a sharp surge coming in on Punjab National Bank. And we saw, at one point at least, a similar thing yesterday as well. The PSU Bank index recovered quite a bit from the lows. And PNB closed in double digits, in triple digits. And we have a little bit more right now. So some recovery coming there, big beaten down space. What I want to do very quickly is, and we'll come back to this in just a bit, talk about steel. Now, this is one of those sectors which, for a while when the market started to correct, late Jan, looked like it was maybe, a bit of a safe haven. It was a global sector. And things were going pretty strong for the steel cycle. Global growth had been picking up, etc., etc. The stock started to falter, and they've not done very much. From that point on, they have not corrected that much, but they have corrected some. This is a Bank of America Merrill Lynch note, and they're basically saying that there is potential for another steel price hike in the month of March. Remember, we got steel price hike in the month of January, and we got a steel price hike in the month of February as well. So they're saying that there is potential for another steel price hike coming through in the month of March. And we'll know that, maybe from companies later in the day, or maybe when we come back to trade on Monday. The reason they're giving is that the discount of domestic steel price to landed cost of imports now is risen to about 3%. It was about 2%, so it's gone up a little bit. Steel prices globally are up between $10 and $15 a ton over the last 1 month, and this includes the Chinese numbers as well. They cite stronger than expected domestic demand. The January number, and we highlighted that when the number came out, the demand was up 7%. Consumption growth was 7% in the month of Jan. If you look back till December, the financial year till December, the growth was 5%. So it picked up to 7% growth in January. And they finally conclude that they see further expansion in profitability of Indian steel players in the fourth quarter versus the third quarter. And third quarter, mind you, profitability was at multi-month highs anyway. It's a keenly watched space, and much interest in terms of what may happen from here, just because it's a global-facing sector, and growth has been pretty good, pretty strong. By the way, we also will discuss more on this particular topic. We'll have a guest join us from S&P Global Platts, the expert on the subject, whether the steel cycle is going to continue in this strong fashion. But that's in just a bit. For now, let's focus our attention back on the market. I think we have Sudarshan with us, Ekta.
Yes, absolutely. Well, Sudarshan, over to you then. What would you be recommending, one on the Nifty as well as your specific stocks? It's turning out to actually be a day where we are recovering incrementally from the day's low. In fact, we're probably going to break into the green for the Nifty anytime soon.
Yes, good morning. The suggestion for the Nifty as a day trade, as an intraday trade, was to go and buy the Nifty with a stop under 450, 10,450. Markets are very choppy, so don't expect big gains, but it could be something that would be ending up in the green. So that's an intraday trade for the Nifty. Individual stocks have different stories, and I actually have PNB as a short sell, but since you've been talking, PNB has been going up, so perhaps that short sell may well be ignored. At some point PNB will become a short sell, but the levels are no longer relevant. I also have DHFL, Diwan Housing, as a short sell. Housing finance companies are probably going lower, so that's a short that could be taken. And finally, Dalmia Bharat Cement, which is in the news since today morning or yesterday evening, that's a buying opportunity. In spite of the small modest rally we have seen today, there's more upside here. So ignore PNB and look at Dalmia Bharat as a buy and DHFL as a sell.
Okay, we got some questions for you, Sudarshan. We have Rajat writing in. He has 100 shares of Tribhuvan Das. He's bought them at about 111 rupees. Wants to know whether to buy or hold or buy more, essentially. What would you tell him? TBZ.
Well, I have to tell him to go and sell it. So don't buy more, don't hold on, sell it. The jewelry and gem sector is now going through a deep correction. It's just started. There will be more downside possibly. Why do you want to remain in a sector that's underperforming so much? So just sell and get out.
Okay, and our next query is from Varun. He is interested in buying 500 shares of Bulgaria Industries. Wants to know if this is a good time.
Actually, yes, it's a good time. See, Bulgaria has been going through in a trading range for years altogether. It's building, I presume it's building a base for a big upside movement. So this is a good time. This doesn't mean that it will start going up from Monday. It does mean that you can buy and hold on as a long-term investor and you will be rewarded.
All right, Sudarshan, thanks very much for that. And you can write into our with your questions to us, and we will take those up with our experts every day.
Okay, well, let's get in some more F&O strategies. We have C.A. Rudramurthy of Vachna Investments who's with us now. Rudramurthy, over to you. What would your stock calls be as well as your index call?
See, first of all, a word on index. For me, Nifty has taken that strict resistance at 10,640-50 area, and now 10,540 will be the resistance for the day. I'm very clear that market is headed down and we will be looking at levels of 10,060. Look at the favorable risk reward. Even at current levels, if I'm selling Nifty future, I'm keeping stop loss of 10,540, which is just about 50 points from current level. Whereas on Nifty futures, I'm having a target of 10,060, which is way below. So I'm expecting from current levels a target closer to 450 points with just 50 points stop loss, which is 1:9 risk reward. And again, 10,500 put options can be bought, keeping these levels in mind. Also on Bank Nifty futures, I'm very bearish. Don't just look at one-day bounce in Punjab National Bank and say the things have changed. For me, Punjab National Bank is giving wonderful opportunity to sell at every rise. Similarly, today, not only PSU banks, even private banks have started coming down. This is definitely weakening and signals of alarm on the downside. For today, I will be even buying 25,200 Bank Nifty put options. One can look at targets of 430 for me, and I am expecting Bank Nifty futures to test 24,750. I will have a tight stop loss of 25,200 for the sell call on Bank Nifty future. Stock specific, I am selling into ICICI Bank, have a target of 290 with stop loss of 311. Can Bank also looks very weak to me. It is finding resistance at levels of 300, 305. So I will have a stop loss of 306 and sell Can Bank futures for a target of 280, and a last sell call even on Indian Bank. This stock can head towards levels of 300, have a stop loss of 331 for this sell call.
Rudramurthy, we will chat again. Thanks very much for your time. Appreciate it. Let's take that steel discussion forward. We have Paul Bartholome, Senior Managing Editor at S&P Global Platts, now joining us on the phone line. Paul, thanks very much. Good morning. My first question is the steel price rise cycle still very much intact?
Yeah, well, we've had some interesting developments in China, which, of course, sets the price, or at least the price trend for most parts of the world. The Chinese government has been implementing these, what they call their winter output cuts, so telling steel mills that they have to reduce the amount of steel they produce over the winter season to keep the pollution down. And just recently, within the last few days, they have decided they're going to extend those production cuts. Maybe not quite to the same extent, but effectively they're going to be in place in some provinces, maybe all year round. So as a result, the market has responded quite sort of bullishly to this. The market's expecting, less steel. That means steel prices are going to be higher. So we've actually seen, a big jump in the last few days. We've had Chinese New Year. It's a little bit slow over that period, but the market is quite excited at the moment and pushing up prices, because on the back of these announcements.
Mm-hmm. Some would say that as there has been some extension of the price or the output curbs, as you said, but markets, and especially financial markets, react to incremental developments, right? So incrementally, would you say that a little bit more capacity is going to come back into the system compared to what is going to be kept shut?
Yeah, I mean, just in terms of the market reaction, I mean, one thing you get in China a lot these days, which I always stress because it's become so important, is the futures market response to government announcements. So you've got a huge amount of speculative, to some extent, retail traders getting into things like Shanghai rebar futures, Dalian iron ore futures. They have a sort of, almost like a hair trigger response sometimes to, either good or bad news coming out of the Chinese government. And that has a big, because the volumes are so huge, that has a big impact on these futures prices. And then the physical markets, the actual physical trading of steel and other commodities takes its kind of, takes its indicator from the future. So it's become sort of very, very important. And something like these production cut extensions, as I said, it gets the market excited, and that flows through to physical prices. On the capacity side, what we're seeing a bit in China at the moment is they seem to be bringing on new electric arc furnace capacity. So that's steel making that uses scrap as opposed to iron ore and coking coal. So there is definitely a big focus on the environment. I mean, that's very, very serious, and that's being monitored quite stringently. But China's still producing a lot of steel. I mean, it still has a lot of latent capacity. The utilization rates, maybe about 85% or something like that. So what I think the global steel market this year is keeping an eye on whether there's going to be sort of incremental sort of steel capacity sort of coming on, even though other capacity is being removed. And I think the other big thing really to keep an eye on in China this year is to what extent is the economy going to be stimulated? Is President Xi, looks like he's going to be in for the long term. That'll be ratified next week probably at the National Party Congress. Is he going to continue stimulating the economy? Is domestic demand going to be strong and absorb all that steel that China's producing? If it tails off a little bit, if it gets tough on some of the financial institutions, shadow banking, that kind of thing, and the economy, the things like infrastructure slows a little bit, then I think the fear for all countries that compete with China is that China's going to turn back to the export markets unless they remove enough capacity.
Just one last question. Where does so two parts actually, but briefly if you can, Paul. First is, does China remain the dominating factor which will continue to determine where steel prices head globally? And second, where does the announcement from the US about curbs, import curbs really fit in, and how much of an impact can that have?
The first one's a very brief answer. Yes, China is the dominant producer. I mean, you can just see the effect on the global, steel markets, including India, that China's had through not exporting quite so much steel, the last year or so. There's actually some rumours that there might be an announcement on Section 232 tomorrow. Chinese aren't particularly worried because they export less than 2% of their steel to the US. They've been expecting it, and they're looking for other markets. It might actually impact. You might find some of the Japanese and Korean exporters might be a bit more nervous. Europe sort of gearing up to complain. So I'm expecting that they'll be quite sort of stringent. But the US, even before Donald Trump got to power, has had very strict anti-dumping laws already in place.
We'll leave it at that, Paul. Thanks very much. I mean, so US steel import curbs, as Paul mentioned, will be important. Tough to say what the exact impact on prices will be, but incrementally, China will continue to drive with its announcements and pronouncements about output cuts and curbs, etc. Will determine the price of steel globally. I mean, that's going to be the driver. We've got oil marketing companies which are coming back up again. So IOC is recovering, HP, BP. We spoke with the management at HPCL yesterday in the afternoon, and they did confirm that marketing margins are now at comfortable levels. They refrain from actually talking about what they are or whether they're at multi-month highs, but they do seem to be at highs over the last many months now, right now. So that's where things are coming in at. Remember, we also will watch for any price changes which might come.